Welcome to the coffee shop, everybody. This is your host, Baristo, and this is just a reminder video. Okay, it's just a reminder video. I'm gonna do this in like 5 minutes for you guys. Hang on, let me just kind of do all of this. All right, there we go. So again, it's just a reminder video. I've gotten a number of messages on the website. You know, in the back end of the website, there's a DM section. And I've gotten information from you guys that you have watched the divergence videos, but it seems like you guys are missing the key thing. It's the confirmation, okay? The divergence reminder, that's what we're doing today. And it is just a 5-minute video to remind you, make sure you do the confirmation step of the divergence. And I'm just going to do that for you alone, all right? Now, I did have a divergence indicator on my chart, and it told me about this. And again, I'm going to tell you guys why you need to stop using divergence indicators. But if you have to use them, please follow the divergence confirmation step, okay? Just because you see a divergence take place, okay, you get a divergence, it doesn't mean that the divergence is going to play out. You get the divergence and it's right here. See, lower high on price, higher high on the RSI, right? And you can see you've got lower highs on the price and the higher highs here, and it seems like you're supposed to be going long, right? It's just what it seems like. This big move takes place here, but I am here to tell you that no no, do not take this trade, okay? I'm not going to get into the details of like the advanced version of the divergence indicator. There's an advanced one which I'm going to do a video for it soon. You guys are going to love it, and it's going to filter out a lot of bad divergences for you, okay? But this is just the confirmation step. You see the divergence, you can see the divergence, right? You found it. Good for you. What I want you to do, again, here's the confirmation. Here's the high, right? Find that first high. Draw a box around that candle, okay? Draw a box around a candle. If you are so inclined, you can go to the previous swing low of price, which is right here. That's the low. Here's that candle right there. And you need to draw a box and just go straight across. Just drag it across. That's it. You see the divergence take place. You're expecting to go long. And I'm going to explain to you the psychology of algorithmic machines that stopped you from getting into this trade and actually gave you something that said, you're not getting it, okay? So the divergence takes place, right? It takes place, okay? You're here on the chart, right? You're here, and you're expecting to go long. So what do people do? They see this high, right? And they see this high, and sometimes they see the lower high, which is really dangerous. The aggressive traders are taking this, okay? And you see this high here. For me, you know, bullish candles make highs, bearish candles do not make highs. And that's a common thing with advanced trading. You look at the bullish highs. So the divergence takes place. At this point, you see it. You see price makes this swing and it closes above. But you want to be conservative and wait for a nice, good swing above this. So what happens? This big candle forms to the downside and then forms way back up. This is where the algorithmic machines really get you. So this will trick people into thinking that all of this is support. So you've gotten support that you need, but it's not, okay? Remember, we drew out the confirmation here at this level and dragged it out. The confirmation is very simple, okay? When you draw out your confirmation area, price needs to swing away and close above, or it needs to just simply move and close above. That's it. You have to close above this level. If you do not close above this range, you do not have the trade. So what happened? In the process of the market moving forward, right? What happens? The market moves forward, gives you a false swing high. This is a false swing high, okay? It's not a valid swing high. You could tell for one reason that it's not a swing high by looking at the RSI. Look at the RSI. You see how this comes up? Look at your RSI moving average. It's facing down. It's still in a decline. This is not a swing high. This is a pullback. If it's a pullback, what does that mean? You're in a downtrend. It pulls back. And that means what? It wants to fall. So this is not a high that you want. That's one way to confirm it. The direction of the moving average, all right? So let's say that you didn't know that. Let's say you never got that, right? you could still see that your price never came above this level. So what ends up happening instead? You get this swing high, price moves down, gives you this big draw back up, right? And it knocks out the short traders. It just wipes them out, okay? It knocks out all of these shorts and longs that were in play. People saw this. They started to enter and put this here. They put their stop loss here. So what did the market do? It wiped out the long trades, their stop losses, and it wiped out the short trades too. It wiped out everybody. Then it comes up here. This close is above this high, and people start going, I'm going to go long. What do? They get in, this longer wick comes in here, and it knocks them out too. It knocks out the other shorts that are in play, and it never reaches this level. Instead, it falls down. But you could have avoided all that analysis by doing just one thing. Just one thing is all you needed to do, right? You see the divergence, right? If you're not that good at the analysis, you could just see the divergence, draw it out, find the candle that got you in, right? Find the candle that got you into that trade. And if you want, go to the candle that got you out of that divergence. And so in and out of the divergence, right? You need to break this range. You have to, okay? You can use the swing low if you want to over here, or you can use the in and out. This would be the in, right? This would be the out, right? Draw a box from one to the other, the close of each candle. That's what you want, right? It'd be the best thing to do. Go to the close of this candle to the close of this candle, and you're good. Break this range, and you are in a long trade. You have your trade. Now, if you drew this out appropriately, you can see that what? The midline of the box is right there. It's right where the algorithms keep knocking out other traders and just keep pushing it right back down. So once you break below this box, go into a little bit more analysis, right? You break below this box, right? You break below it because you drew out your in and out, right? Wherever it was here. You drew out the in and out, okay? So this is the low. I'm sorry. This would be the low, which is right there. Look what happens every time price breaks below this box. Where's the RSI? It's not below zero, okay? Breaks below the box, not below zero. Breaks below the box, still not below zero, right? Here you're already low, but you didn't break below the box. You crossed down zero. If you want, you can take this as a clear indication that you, my friend, are still in a downtrend and your long is not coming. So again, you break below the box, you're getting closer to zero, right? Closer to zero, finally you are below zero. How many notifications do you need to tell you that you are in a short trade? All of your breaks below zero are in this space. Where is it? Here. You got one here, and you got one here, right? There, you're in a downtrend. There's nothing to wait for. Take your shorts. Look for your breaks below zero, your crosses below the moving average. Take your shorts, whatever you want to do, right? Stop looking for that long trade. It's not coming. And that's it, okay? There is the divergence confirmation reminder. Draw your box. Break appropriately across that box. If you don't break the right side, you're on the wrong side. Peace out, everybody. Welcome back to the coffee shop.